Happy Friday. Good morning. That was great, Rich. All right. So markets clawed back a bit yesterday. And one of the things we talked about was, the possibility that this market recovers again, as it has in the past, even after nasty wide range down bars, breakout failures, and virtually any bearish pattern. This market could care less. So is it different this time? Which we always are going to be asking, of course, not to become complacent. And we've recovered the fact that various markets, they're up against prior resistance, but the way they've been trading, it's suggestive that they're going to make new all-time highs. So problem here, a little problem, is to see if it actually evolves into something bigger. Meaning the breakdown of trends begin in smaller time frames. So the weekly trend, as you could see, just hardly any corrective action whatsoever initially up into March, and then this little sideways consolidation and then continued higher. And one of the things I explained in the room yesterday was the way to view slowing momentum without indicators. And so you do that by recognizing the initial push, little correction, the next push, and where it starts a little correction, and then taking note of the distance between the two. So when the second one goes up on fewer bars than the first one, it's really simple. Your momentum is beginning to slow. And those that use indicators, they point to their bearish divergence type of situations, as if that really is going to guide them in some way. And the reason I say that is that slowing momentum does not mean a change in trend, which in the weekly time frame would have to break down through here. Slowing momentum can result in some sideways chop and then continue higher. And then the indicator people are going like, oh, what happened? Or they draw lines connecting dots and think, oh, the indicator broke out. No, the market or whatever you're looking at just never broke down, and you're just looking at things through glasses that are a derivative of price, and you're just misguided. In any event, here on the daily time frame, prices did break down through two swing lows, and we're looking at the Dow futures here, so the pictures can look a little different depending on the different index you're looking at. In any event, it made a new high and then traded down below here. And then buyers stepped up yesterday in this area of price support. You can see all of this happens just by looking to the left to find out where your reference points are. So one of the things we talked about yesterday was the fact that, and I think we weren't looking at the Dow futures, we were looking at the Qs and the spiders, and they were in a trading range. And, they came down to their respective ranges. They kind of poked under there a little bit, and then they started coming back up again. So this is what we have right here, pre-market, where the Dow went down to support. It recovered a bit intraday, couldn't get above its open. And now there's a little bit of, buying that's going on. So as we look at things in multiple time frames, right, we looked at the weekly, we looked at the daily. From an intraday trading point of view, I want to see, is the coast clear, so to speak, as far as moving higher? Well, the hourly here is in a downtrend, right? Lower highs, lower lows, but now the retracement back up to resistance has been a deep one, right? Look at this one, nasty crack, and the retracement here is weak. It can't get that far up into the prior break, and then as it cannot, and it has a failure, right? There's a failure setup right here. It then heads lower. And, we look at price patterns as beliefs, expectations, trader psychology, all in motion that's creating a picture. So when we look at a scenario like this, we say, well, buyers are buying the dip because it's in an uptrend. And as they process information, either through price action, through their algorithms, through their Ichikomi clouds or their stochastics and whatever, they say, it's not going up. What do I do? Get the hell out. Maybe it's going to go back down. And as the stops get hit, down it goes. And then the whole process starts over again, as it comes down to the next support point. So professionals that know how to read price action in multiple time frames, they go through, I don't like to call it a merry-go-round, so to speak, but you go through these time frames looking at the alignment of them and saying, okay, this time frame reached this significant support and this one reached significant resistance. And the takeaway from all of this is don't expect too much from this market until it breaks out of this range right here. So we're always looking to keep our biases in perspective of where the markets are at. Well, Peter's asking, so looking at the daily bars of the spiders, what does yesterday mean? Well, what does yesterday mean? Meaning this bar of the spiders. You want to look at the spiders. So that's okay. Let's go to the spiders. So yesterday's daily bar. So Peter, the first thing to do is recognize that a daily bar or a bar in any time frame is just one piece of information. It can be meaningful or it can be totally, nothing. Meaning, where is it in the location of support, resistance, and what is the trend? Because different bars, we can look at them and say, this is something to respect. Whereas, let's say, this is a kind of a minor bottoming tail bar, and it's in an uptrend. So we're going to look at this and say, I have to respect that. But the other side is it's coming after a wide range bar down. So this new high, this gap up, and this failure here is just one piece of information. It's in an uptrend. Prices are still above major support here. The retracement down to that major support is on the edge of getting a little bit too far, but prices are recovering here this morning. So the takeaway for me here on this day with this pattern, this alignment here, is at the moment not to expect too much from today. Now, we look at individual stocks and say, okay, this one looks better than the market, and this one's on its own page, and this one reporting earnings, and that's a gap play, and so on. So just because the market is doing one thing, that doesn't mean all stocks are doing the same thing. But for the most part, most stocks are going to follow what's happening in the market or have some effect on it. And the ones that aren't moving up now are the ones that are showing relative weakness. So that's another concept to take into consideration. You've got candlesticks, you've got trends, support, resistance, relative strength, relative weakness, and so on to come to analysis that will guide you. So looking at the spiders here, they've gapped up, they're holding up, buyers stepped up on the dip, and they're at this resistance area, and they have a void above. So we have an opportunity here this morning. It should happen in the morning. That if they can get through this 293 area, I don't know the exact number, let's just call it 293 area, it opens up the door to retracing back up into the wide range bar. Okay? The wide range bar is a momentum move in a smaller time frame, and as we went through in the green room yesterday, looking at CI as a trade that we were considering shorting, and I explained just that. There was a wide range bar. I said it was the weakest link, and the 5-minute chart and the 2-minute chart never set up with a high probability shorting opportunity. And when it failed to go down, the shorts covered and it went up pretty aggressively as those shorts got out of the way. And that isn't to say they were on the wrong side, right? Because it did look like it was going to go down. But then when the market didn't go down and it didn't go down, intelligent traders get the hell out of the way. Qs, a little bit weaker, right? But down at support. They're holding up here today in the same way. And what I'm interested to look at, and I'm sure you guys are, is to see where this weekly bar ends up at 4 o'clock. Do we have the second red bar in 2019 on the weekly chart? And if we do, well, then we go into next week looking for, well, does it break below the low of last week's bar? And if it does, it opens up the door to a further pullback down to, well, where is always the question. Well, you've got unfilled gaps here. You've got a little bit of support there. And you got the 50 MA right there, which is widely followed. So breaking below here, right, that's your first reference point of support on the weekly. And your first reference point of resistance on the weekly is last week's high. So right now, what we have is the beginning of a trading range on the daily chart within an uptrend. Is that what we call a stage 3 type of top? Who knows? We don't know yet. We just know that right now it's consolidating after this run, which is normal. And the Russell clawed back yesterday. Early in the week, we were looking for this to break out. It couldn't do it. It pulled back. The weekly chart hasn't been damaged. And this week, or if it happens today by chance to get above this high, well, that would be really bullish for the markets if this can get through this high today. And it's got a little bit of a run to try and make to do that. So I'd kind of prefer, whatever, if it was a wide range green bar breaking out of here today, and it was looking like that at the close, you have to be long over the weekend looking for this to go higher. That's the bottom line. If it consolidates up in this range here, that's going to be chopped today, and then we look for it to see if it breaks out next week. Transports, right? They've been the weaker. They're notorious for playing catch up. They are notorious also for leading the way down in some type of a correction. And this gap below that green bar was bearish. So now it's at support and the process starts over again. And I did mention yesterday, this is where buyers needed to step up, and they certainly did that. And you had better performance in the transports than you did in other markets. And that happens a lot in markets and or stocks that lead the way down, and then they try and reverse back up again. So there's always this rotation of money from strength to weakness and back again. So you've got the 60-minute here. There's your bottoming process and consolidation. And we'll see if this turns out to be a shakeout type of a pattern. And so we'll take a look, see if the transports can gather some legs here. They're just consolidating at resistance on the weekly. So from this time frame, nothing wrong here. Just normal type of price action at a resistance point. Notice the slowing momentum at resistance, normal. Now we'll see if it can make the turn to go higher or whether it pulls back some more. We'll see. And the mid caps, right? They look like they were going to lead the way up this week. That didn't happen. So this week has just turned out to be another kind of a yawn, which has gone on now for about, as you can see, about 4 weeks now of consolidation. And, so after that little run, we'll see. We've got earnings that are, in full steam here, and we'll see if this can get out of this range here next week. Peter's moving averages align on weekly, monthly, daily. How come it's different on 5 minute? But Jack is asking me, moving averages align on weekly, monthly, daily, and 1 hour. How come it's different? Because you're changing time frames, Jack. Moving averages move around. They're not static like a trader pivot line, and it's why they're subjective. So you need to understand that, and also that moving averages are not support and resistance as price action is. You can't change the location of price once it's on your chart. If I change a time frame to 5 minute to 1 minute, the 200 MA moves around, and that confuses many. Peter's asking me, I'm trying to hone my bar by bar skills, and I wasn't sure if there was much to get from the scenario or not. So I'm looking at multiple time frame support. It's a great exercise, Peter. So what you can do, depending on your platform, is, you can kind of go back and you can move the bars along like I am, one by one, and just do bar by bar and just go through your mind what you think is going to happen while you apply support, resistance, and so on, and trend. Thank you, Debbie. Debbie's telling me it was a great lesson. And yeah, you know what, it was kind of spur of the moment that, you know, some questions just brought on that lesson, and yeah, it turned out to be great. So today we're kind of in limbo, so to speak. Will the markets consolidate their recent runs? Nothing terrible has happened. You know, when the Fed chair came out with some words, the market sold off, and now, you know, that's like a one-day thing, and market digests it, and we see what's happening. So buyers stepped up yesterday, regardless of what was said that was so terrible, where everything fell the day before. But now we do see some problems, meaning some things, you know, we go through sectors. This is what we call a top-down approach. And one of the big problems, big disappointment, was energy, which was basing and starting to move up in oil, you know, that looked so good. I mean, it's gold. You know, oil did come up into some resistance area. So the expectation was, can it get through it, or is it going to stall? And it stalled, and now it broke lower. And energy, which was kind of, I thought, ready to start moving, which XOP was the best looking. And maybe that's why it's getting clobbered the worst here, because the one that's the best looking is where the most of the money flows into. And then when it didn't work, you know, oil started to come in, you know, most of the money starts to bail out in the same way as it went in. So we have different energy sectors, but you can see they all took the shellacking, and the ones that are down at support now, buyers will step up again and, you know, see if they can repair the damage. But, you know, technology may have a little double top here. We've seen that technology, you know, some money is coming out of there, and, you know, where it's going at this point, to a certain extent, it's I'm just looking for the ETF, their financials, you know, which broke out here, and so far they're holding on to the gain. So, so you know, you go through these, look at these. This is what we do in the green room. This is what we do in our letters, advisory letter, ETF letter, to go through what the markets are doing, what different sectors are doing, different stocks are doing, and then how to exploit those technical patterns through trading the underlying directionally, or trading options or option spreads. And as we call it, factory work, right? Do the work every day, look for the opportunities, take our trades with calculated risks, and that's how professionals do it. So with that being said, I turn it over to Mr. Gibby.
All right, good morning, folks. Thank you. And our inventory is fairly light, and it's not surprising because we've been saying in all of our updates, hey, we're going to keep trading the long side, but we got one eye at the exit door. When we see chinks in the armor, we're going to be tightening stops, and that's exactly what we've been doing. The weekly, we only have 3 positions. Qualcomm, we sold a put spread yesterday, had a bearish close, but we had to sit through it. We're you know, on support here, gapping up. So hope that holds. BABA, kind of similar, gapping up. Put spread for next week. UVXY is a volatility ETF. On the nice rally there, we tightened the stop. Actually, all right, it might be gapping under, yeah, it's gapping under our stop actually, because I tightened it. Well, I'll take a look at it. 5-minute open. Our swing and options trader, TPC, we're long stock. XOM, we're short stock, and I tightened the stop yesterday. I'm going to put him in a window. Well, I have him on the other computer. Might even do 5-minute high. The second of the third target was low 77s yesterday, and it did close at the dead low, but I don't know. I can't call that. I can't take credit for, you know, booking that. Low to me means 77.15 or below. BA, long stock, had a nice close, so hopefully that'll continue and we can raise our stop. J&J, we have a covered call. And 142 looks fine. We're short the 143s for next week. Finally, Lyft, we have a put spread. down a few pennies, but we covered half into the afternoon rally yesterday for over 50% of max profit earnings next week. It initially was going to be a long-term kind of core earnings trade, but since we're over 50% of max profit, now it's not worth the risk for the remaining profit potential. We'll trade it again if it sets up after earnings. Not a gapper, but I have ADI on my list from yesterday. Greg, you're talking to me, or did you not mute?
I didn't mute. I had my two programs open on the same computer. I just realized it was going to mess things up for me.
All right. Clack's on my list also from yesterday. Scanning. EXR is a carryover. DWDP got shellacked. Well, I like those. Look, this 15-minute is setting up to be a day trade long. I like that as a day trade. And then possibly put spread also. I'm going to put that in a little window. DWD. Now, I got an email this morning about our UNH. He's like, hey, Dan, why did you tighten the stop over this 230 pivot yesterday? And I said, because here, just look at the 15-minute chart. We had a beautiful breakdown, slicing through resistance, bounced off this support. Look, I didn't expect it to go that far. I expected any retracement to not go beyond this. And since we still had a profit at this point in time, I'm not turning this thing into a loser and going into hope mode with a stop, with the original stop over all these highs. And as you can see now, the market, it closed at the high, gapping up. So that, he asked a very good question and I gave him my answer. And that's where I think, Greg and I are different many times. I do play the open positions more defensively to protect gains. I don't know what the stats are on that. I'm sure many are fantastic decision, and many are, well, my stop was too tight, and the position kept working, and I left money on the table. Gappers here, Munster, 62.75, big gap. Now remember, we had 3 minutes here. I'm looking for tier 1 setups. Now the gap's too big. Tier 1 meaning multiple time frames are ready to start their engines and start the race. Weight Watchers 23 up here. I wish it was gapping just to 22-ish, but it's still okay. So that's a tier 1. I'm going to put that. And can somebody verify? Well, here, I'll do it. Verify that that's earnings gap. Well, earnings are 8.5, so I'm just assuming it is. Yeah. Echo Alpha, I don't think this is earnings, but I think it's gapping down in sympathy. They use the word ATBI. Yeah, exactly. See, this is the one Gustav tried sucking me into yesterday. Ballard, 15 bucks. Yeah, I like that monthly. Is Ballard earnings? I'm teasing you, Flyman. BLD is this. I wouldn't call this a core trade per se, but Alex, you and I have this discussion sometimes. But I would call it a swing with a pig target. I think this can go to 17 bucks. $2 on 15 bucks is what, 12.5%. Tesla here. I posted in our chat, actually, Telegram, with this bullish gap up here deep into yesterday's high, that we were going to try to sell a put spread. And then when I saw it fill in the gap, I just canceled it. I always watch the usual suspects, the FANGs, the Boeings, the things that got shellacked. CBS here, 8 cents. I got no interest. SRC, gapping down, 41.70, bearish, 50% gap. I'm going fast, obviously, because we got 2 minutes to go. BYND, Beyond Meat. I don't even know what the heck that is, but IPO yesterday. Big old bar here. You can barely see it because of this stupid platform. Gapping up. I'm not chasing it, but similar to Lyft and what was that? PINS, PINS. Let Beyond do this. Let it just get parabolic. And then look, our entry was yesterday. I was trying to short a call spread on this. It was a no-brainer setup, a 180 reversal from a Climo, but it had earnings next week. I don't know what's up with Amazon, and that's undoubtedly helping the NASDAQ today, 1948, so it's gapping this prior high. But let's keep an eye on that for a put spread. X had earnings 15. It's just gapping up in a downtrend, no interest. USX, year gone, I got no interest. Bravo Lima, I can't tell where it's gapping, but if it's gapping to 52, that's what we call a bear gap surprise. But the gap's too big. I would have preferred it, gapping like to 52 or the lower end of this. So no interest on that. Band, I don't know, maybe call spread, but the weekly is still a bullish 1, 2, 3. IBM, key buy of IBM. I don't know what that means. BMY, yeah, 5-10 minute high, and also a put spread. I'm glancing at my opens here again. And they're fine. I mentioned XOM. I'm going to keep a tight leash on. Look at WW in the upper window. Trader, if you want to see if there's